Good morning. We'll give everyone a few minutes to get into the room. Welcome to our Homestead Exemption webinar in our Property Owner Webinar Series. Today, we're going to cover some information related to exemptions, including the Homestead Exemption, the over 65 and disabled persons exemptions, and other less common but equally important exemptions. There are many property owners that have not claimed their homestead exemptions, and it's a huge tool for property owners to really save money on their taxes. So we want to make sure that everyone who is eligible for the exemptions are getting that benefit. If you have any questions during the webinar, you can use the Q&A feature, and we'll circle back at the end of the webinar and answer any questions. And so with that, we will get started. So what is an exemption? An exemption is simply a deduction from taxable value, and it's the easiest way to make direct impact and lower that your tax bill. The largest benefit of exemptions is that some cap the increase of your property's value each year. And we'll discuss our general residence homestead exemption that provides that limitation of value. And on average, Travis County property owners save $1,876 on their property tax bill this past year because of the homestead exemption. So exemptions are a huge benefit to property owners. And before we get into the specifics of each exemption, we need to understand how a tax bill is calculated and what factors determine how much you'll pay in taxes each year. There are three factors that determine the amount of taxes that you'll pay: the market value of your property, any exemptions that you may qualify for, and the tax rate that's set by the taxing entities. So the first factor, the market value, is determined by our office, the appraisal district, and we do that each year as of January 1st, which is the assessment date. The market value of your property is just what your property would sell for. The second factor is the exemptions that you or the property may qualify for. And there are many exemptions that we'll talk about today, but the most common is the general residence homestead exemption. And then the third factor is the tax rate that is set by each taxing entity. And those taxing entities include school districts, the city, the county, water districts, municipal utility districts. And this tax rate is set by these entities ultimately determines what you'll pay in taxes each year. And the purpose of the appraisal itself is just to allocate that tax burden fairly amongst taxpayers. To determine the amount of taxes, you multiply the taxable value of the property by the tax rate that's set for each taxing entity. And each property will be taxed by multiple taxing entities based on where that property is located. So you'll have a tax due for your city, your county, your school district, and any other entities that your property is part of. So you multiply taxable value by the tax rate to get the amount of taxes that you're going to pay, but how do you get to the taxable value? So we discussed a minute ago, market value is determined for each property as of January 1st. And again, that's just what your property would sell for. If you have an exemption that caps the increase in value each year, then there's a limitation of value on that property. And market value less that limitation gives you the assessed or net appraised value. Those terms are used interchangeably. Then net appraised less any exemption amounts gives you the taxable value. So that's a lot of information. The market value less your limitation from any exemption gives you net appraised, and then net appraised less any exemption amounts gives you your taxable. The homestead exemption provides a huge benefit to property owners by limiting or capping the amount of value increase each year. The homestead exemption limits the value increase to last year's net appraised value plus 10% or the current market value, whichever is lower. In the Austin area, the market has historically been very robust and we seldom see a downturn in the market. It's happened in past years. We saw it in 2008 and 2009 with the Great Recession. The market value in those cases was the lower of the two values. But however, in just historically in Austin, that 10% cap is really going to give you a benefit so that your value is only increasing 10% per year. And again, this limitation applies to the net appraised value, not your tax bill. So the value is capped at no more than 10% increase, but that doesn't mean your taxes can't go up more than 10%. Because remember, we talked about taxing entities, each setting their own tax rate. And each year they determine the tax rate that is needed to fund their budgets. And depending on what taxpayers have voiced as important services that they want, that goes into that tax rate calculation. And again, the tax rate is set by the taxing entities, and that's what ultimately determines how much you'll pay in taxes. So now that we know how taxable value is determined, let's talk about some specific exemptions. And again, the most common exemption is the general residence homestead exemption. And this exemption is for owner-occupied residential properties. And the biggest benefit of this exemption is the limitation on that value increase. The value is limited each year to the lower of last year's net appraised plus 10% or the current market value. And the January 1st that you own that property sets the base year for the limitation. And then each subsequent year that you own the property, the value increase will be capped at the 10% increase. So for example, if you were to purchase a house in February of 2024, the base year of the limitation will be January 1st, 2025, because that's the first January 1st that you owned it. And then in 2026 and all years, subsequent years, your property value will be limited to the lower of the 2025 net appraised value plus 10% or the 2026 market value, whichever is lower. The homestead exemption also has a state mandated exemption of $100,000 for school districts. Other taxing units such as the city, county, ACC, they can adopt a local option homestead exemption up to 20%. The city of Austin and Travis County, as well as the healthcare district, have all adopted a 20% homestead exemption. We do provide a list of each taxing entity on our website and what exemptions they've adopted. And those can be found, that listing can be found at traviscad.org/homestead exemptions. And in order to qualify for the general residence homestead exemption, the property must be designed and adapted for human residence and be the principal place of residence. So the homeowner must own and occupy the property. You also can't claim a homestead exemption on any other property that's within Texas or any other state. You can only claim one, and you must file the exemption application by April 30th in the year that you qualify. Some property owners may be eligible to receive the homestead exemption in certain situations early. So if the property does not have a homestead exemption on it as of January 1st, and you're not claiming an exemption anywhere else, you meet all requirements for the exemption, then you could receive a prorated exemption amount based on that date you purchased the home and began occupying it. So for example, if the prior owner of the property had a homestead exemption and you purchased that home in February, the homestead exemption from the prior owner is going to remain on the account for the entire year because they qualified for that exemption on January 1st. This also means that their limitation or capped value will remain on the property for the year. So really for the new owner, you're receiving that benefit from the prior owner and you're getting to inherit that limitation for that prorated portion of the year. So the over 65 exemption is for homeowners who are 65 years of age or older. And this exemption is state mandated for school districts at $10,000. The over 65 exemption also establishes what's called a tax ceiling. And that tax ceiling limits the amount of taxes paid to the school district. So in the year that you turn 65 and you qualify for this exemption, your school taxes are frozen and you'll never pay more than that amount you paid in that first year. The tax ceiling for school districts can also be transferred to another home if you were to purchase a new home and move. And then other taxing entities can adopt the over 65 as a local option exemption in a flat dollar amount. So for example, Travis County, the city of Austin, and the healthcare district all offer a $124,000 over 65 exemption. Other taxing entities besides the school district can also adopt a tax ceiling similar to the school districts that would freeze those taxes. Currently, only the city of Cedar Park, city of Leander, and ACC offer a tax ceiling for the over 65 exemption. The one difference is tax ceilings for non-school districts cannot be transferred if you were to move. So to qualify for this exemption, you must be 65 years of age or older. Your property must be your principal place of residence. And again, you cannot claim this exemption on any other property. If you're the surviving spouse of someone who is over 65 or older, you can also qualify or inherit that exemption from your spouse. The two qualifications are that you are at least 55 years of age when your spouse died and your spouse was receiving the exemption or would have qualified for it in the year that they passed away. There's also an exemption for people who are disabled, and it operates very similar to the over 65 exemption. Usually a property owner would qualify for this exemption if they are receiving SSI payments from the Social Security Administration. Like the over 65 exemption, the disabled persons exemption lowers the taxable value of your property by $10,000 and establishes a tax ceiling for your school taxes. And again, this tax ceiling can be transferred to another property if you purchase a new home. And then also taxing entities other than the school districts can adopt this exemption in a flat amount, and they can also adopt a tax ceiling. Just like the local option over 65 exemption, you cannot transfer the non-school district tax ceiling for a disabled person's exemption. To qualify, you must have a medically determined physical or mental impairment. The impairment must prevent you from engaging in any substantial gainful activity, and the impairment must be expected to last for at least 12 months or result in death. And just like the over 65 exemption, the surviving spouse may qualify or inherit the exemption if they are at least 55 years old when their spouse passes away, and the spouse was receiving this exemption in the year they passed away. So if you qualify or could qualify for both the over 65 and disabled persons exemption, you can apply for both, but you can only claim one of these exemptions per taxing unit. Generally, taxing entities keep these two exemptions in parity. However, there are some entities that have different exemption amounts for each of these. If you qualify for both and both the over 65 and disabled persons, it's important to research each taxing entity and see which exemption would offer you the largest benefit. And again, we have that listing of all the taxing entities and the exemptions offered on our website at traviscad.org/homestead exemptions. If you are a disabled veteran and you are 100% disabled, you can apply for the 100% disabled veterans exemption. And this exempts the veteran from 100% of property tax on their residence homestead. And that's 100% for all taxing entities. To qualify for this exemption, you have to be receiving 100% disability compensation due to a service-connected disability and have a 100% disability rating or an individual unemployability rating from the VA, Department of Veterans Affairs. With the application, you have to provide that letter from the VA as supporting documentation in order to receive this exemption. Surviving spouses can also inherit this exemption, but they cannot be remarried and they have to continue to own and occupy the property. So for this exemption, the veteran has to be 100% disabled with a service-connected disability to qualify. And the exemption is applied as of the effective date of their disability rating. So if the VA letter shows that the disability rating is effective as of June 2nd, for example, then the exemption would be applied as of that date. This means that you would receive a property tax bill for the first portion of the year in which you didn't qualify from January 1st to June 1st. And then the property would be 100% exempt from June 2nd through December 31st of the year. If you are a disabled veteran, but you are not 100% disabled, there's an exemption that is determined based on your percentage of service-connected disability. And you can apply this to your residence homestead, but this exemption can also be applied to other properties. So if you had some land or a business, your disabled veteran exemption could apply to those properties as well. This exemption is a much smaller amount. It ranges from $5,000 to $12,000, depending on your disability rating. And to qualify for the disabled veteran exemption, the veteran must be classified by the VA as disabled with a service-connected disability of 10% or more, and you must be a veteran and a Texas resident. And again, the surviving spouse can inherit this exemption as long as they have not remarried and they are also a Texas resident. The surviving spouse of an armed service member killed in action or a first responder killed in the line of duty may also qualify for an exemption. This is a 100% exemption from all property taxes for all taxing entities, and it is state mandated. So to apply for any of these exemptions, there's an application. Those applications can be found on our website. You need to complete the required application and also include copies of any other required documents. And the deadline for exemption applications is April 30th. It is free to apply for your exemptions. A lot of new homeowners will receive mailers and solicitations for people who will charge them a fee to file these exemptions. You don't have to pay anyone to file your exemptions. It's free to apply. And those applications are on our website, and we have staff available to help if you need assistance filling out that form. Many of the applications require additional documents, and a big one to remember is to provide a copy of your Texas driver's license or ID card. So the address on your driver's license must match the property address, and it has to be a Texas driver's license or ID card. We can't accept any other forms of identification, such as a passport or a concealed carry license. It has to be a Texas driver's license or ID card. If your name is not on the deed, you have to provide some evidence to establish ownership. A lot of times with married couples, only one person is named on the deed. And in this scenario, you will just need to provide us some evidence to show that you are both owners of the property. For the over 65 exemption, you'll need to provide us with proof of age, such as driver's license or a birth certificate. For the disabled persons exemption, provide proof of disability. Most commonly, that comes from your Social Security Administration letter, disability letter. For the disabled veterans exemption, you'll need to submit a letter from the VA that you will need to provide. You need to provide that with your application that has your service-connected disability. And if you're a first responder, then you'll need to provide a letter from the Employee Retirement System as part of the required documents. Heir property owners can also qualify for a homestead exemption. A lot of times if a property has been in a family for a long time, the deed hasn't always been filed. So there's not a clear ownership record for the property. And these types of properties can also qualify for a homestead exemption. To receive a homestead exemption on an heir property, you'll need to provide an affidavit establishing ownership, a copy of the prior property owner's death certificate, a copy of the property's most recent utility bill, citation of any available court records, and then the affidavit authorizing submission of the application. And that's just an affidavit from all heirs authorizing you as the occupant to claim the exemption. So common concerns that we hear quite a bit. If you have a married couple and both are on the deed, do both people have to sign the application? And no, only one owner needs to sign the application. You can only receive a homestead exemption on one property in the same year. So if you buy a new property during the year, you can only claim that exemption if you didn't have an exemption on your previous property. You can't have more than one, multiple properties. Homestead exemption is only one. You may be eligible for multiple exemptions, so you can layer some of these exemptions on top of each other. So for example, you can claim the general residence homestead exemption on your principal place of residence. Then on top of the general residence homestead exemption, you could claim the over 65 or disabled persons exemption. And these are in addition to the homestead exemption. Then if you were to qualify for maybe one of the disabled veterans exemptions, with a 10% disability rating, you would receive an additional $5,000 on top of your over 65 and homestead exemption. So a lot of these can be layered together. In most cases, exemptions reflect the owner of the property on January 1st. So we have a recurring theme. January 1st is a really important date for the appraisals and exemptions. You may have an opportunity to file a late homestead application. So for a general residence homestead exemption, you can still file an application for up to 2 years. So if you missed the April 30th deadline in the year that you qualified, you can go back 2 years to claim that exemption. For the disabled veteran exemptions, you can claim that exemption going back 5 years. So there's still an opportunity for you to claim any exemptions that you're entitled to if you've missed that deadline. Generally, once you file for an exemption, you don't need to file each year. One thing we see a lot is if a new deed is filed on your property. So for example, you're adding or removing an owner or putting your property into a trust, you will need to file a new exemption application or let us know that it's the same owner. So the appraisal district really has no way of knowing that this new deed is really the same owner unless you tell us. State law now also requires that appraisal districts audit homestead exemptions every 5 years. So you may occasionally be asked to reapply for the exemption as part of this audit process, and you just go through the same application process. Another exemption is solar and wind energy exemptions. So if a property owner has purchased any solar or wind powered energy devices, you may qualify for exemptions on these devices. For this exemption, you must own the energy device. So lease systems are considered personal property and should not be taxed. The application for this exemption can be found on our website. We also offer an online application through the owner portal. And along with the application, you should submit documents detailing the installation date and total output of the system. So if the device was installed before the property was purchased and was included in the purchase price, you can also include a statement to that effect with your supporting documents. The online application and more detailed information can be found on our website at traviscad.org/solar. And then again, applications must be submitted by April 30th. And again, lease systems are considered personal property and shouldn't be taxed, but the appraisal district may not know that it's a lease system. So if you see a solar or wind device on your account when you get your notice of appraised value and you have a lease system, you can just email us at spex@tcadcentral.org. And just let us know that that's a lease system. You can include your property address, property ID number, and a statement just stating that the solar system or wind system is leased. If you need more information or have additional questions, you can reach us at our exemptions hotline. The number is 512-873-1560. And we have staff available to answer that helpline Monday through Friday from 9 a.m. to 4:30. You can also visit our website, traviscad.org/homestead exemptions. And we have some FAQs and just a lot of good information on the website over those exemptions. We also offer an online application, which makes the processing time shorter. So we encourage you to file the application using the online application so that you get that exemption on your account quicker. We also have a property owner toolkit available on our website at traviscad.org/toolkit. And the toolkit includes some really valuable information, especially for new homeowners, about the property tax system and the calendar, and information on the homestead exemptions. So again, that's traviscad.org/toolkit. We also have a homestead exemption event this Saturday, February 17th at 1 p.m. at the Pflugerville Public Library. And that's located at 1008 Pfluger Street West. And then our next webinar in our property owner webinar series will be on February 28th at 12 p.m. And it'll cover business personal property. More information and registration for that webinar can be found on our website at traviscad.org/webinars. And with that, we will answer some questions. So the first question is, I own 2 properties in Austin. I lived in one of them with the home and had a homestead exemption, but I have moved to the other home recently to rent out the old one. How and when do I transfer the homestead exemption to the second home that I live in? You would just file a new application. So again, that's as of January 1st. So you would need to let us know before April 30th. File that exemption application for the house that you're now residing in. How can I tell if a homestead exemption is already on a property from a previous owner? So on our website, we have a property search feature where you can search for your specific property. And once you pull that property up, the exemptions will be listed. So if they have a homestead exemption, it'll have an HS under the exemptions. If you acquire the property after April 30th and there isn't an exemption, can you still apply and receive for that year? Yes, you can. So if you did not have an exemption on your prior home and the current home that you just purchased doesn't have an exemption, then you could apply for that prorated exemption amount. So if you bought the property April 30th, you would get that exemption amount prorated for May 1st through December 31st. Do you really need to apply for the over 65 exemption? Isn't it automatically added? Yes, we do automatically add over 65 exemptions if we've received your birth date and most times this comes from a homestead exemption application that you turned in the past. So if you get your notice of appraised value and you don't see your over 65 exemption on your notice, but you qualify, just give us a call. You can provide us with your birth date and we can get that added. But yes, we do automatically add anyone's over 65 if we have your birth date on file. there are two owners on the deed, but they are not married, should each file a separate application. You can file one application and just provide both driver's license in that scenario. Own my property since 2020, but I just filled my homestead exemption. Does this exemption get backdated to 2020? So we can go 2 years back. So you could get it for 22 and 23. So it's 2 years from the delinquency date. Can you please explain more about the requirements for a prorated homestead exemption? Yeah, so this was a new law last legislative session, the 87th session. And it is a confusing topic. So if you do not have a homestead exemption on your prior residence, or you were renting before and this is your first home, and the seller didn't have a homestead exemption on their account, then you can qualify for that prorated homestead exemption. And what it does is it takes that state mandated exemption amount for school districts and it gives you a portion of that exemption amount for the year. It does not, you still have to qualify for the limitation in your base year, which gets set that next January 1st, but you do get the benefit of a prorated exemption amount. So you can't have a homestead exemption on a prior residence and the seller can't have a homestead exemption on the home. Is there a lookup for the exemption acronyms? We can add that to our website if it's not there. I'll double check that today and we'll get that added. If I purchased a brand new home in mid-May, is this year the appropriate time to submit the homestead exemption? Yes. So if you purchased your property in May of 2023, you would qualify for that exemption January 1st, 2024. So your deadline to file the application would be April 30th. Apply for prorated homestead exemption this month for the new property. The question about ownership percentages, if you could call into our customer service department, we can help get that sorted out for you. And we've had a question about how market value is calculated, and we have a webinar that specifically covers that. So we have a lot of information on our website. It's a pretty long topic, so we have a whole webinar devoted to that. So I've noticed that other CADs are showing estimated taxes with and without exemptions. Travis County used to show that as well, but not anymore. So the law changed in the 87th legislative session, maybe 86, but we now provide a tax transparency website. So ours is travistaxes.com, and that site will give you estimated taxes. It also looks at proposed rates that the taxing entities are looking to adopt. So you can really see what those rate proposals and how it impacts your specific property is going to play out. Again, that's travistaxes.com. So there was a question about having multiple houses, one in a different county where you used to live and you resided. You can claim the homestead exemption on any house you own and occupy. So if you're now living in Austin in that home, then you can move your exemption here. Okay, that is all the questions we have for today. Thank you for joining us, and we hope to see you at our next webinar and any events. Thank you.